All right, let's start with what's happening with the markets. So one positive note, I'll start with the positive note. Markets are still in an uptrend. They are not in a downtrend at all. I know a lot of stocks are down, but even the short term, it's still an uptrend. Same with NASDAQ. Actually, NASDAQ did hit the trend line today. As soon as it hit the trend line, it started bouncing. I saw it lose the 50-day, but when it hit the trend line, see, I mean, this is something that you will get used to. And this trend line works best when it is touched for the first time. So you can only draw a trend line with at least 2 points, right? So when you draw this and the first hit, I mean, the third touch of that line, generally you will get a bounce. We don't know how long, but this is not something I would go for, because as I said, this did not last long. I mean, 1, 2, 3, 4, 5, 6. So after 6 days, it came back and tested. Again, we have so much uncertainty with the Fed and everything tomorrow. So, but generally, the best trend lines are the ones. Let's go back a little farther and see if we can find an example. It works both ways. So let's say this one and this one are we only had this and this, right? So it went all the way up and came back and tested this and bounced back. This is a good place to buy. I mean, if you are buying any pullbacks, a lot of people do that, whenever it tests the trend line for the first time after you draw it. And these points should be a little farther away, not like this. Here, this is ES, but we'll go back to NQ again. As long as these 2 points are farther away, the farther away they are, the more chances that it's going to bounce. And generally when it bounces, I mean, this is not a big pullback. Whenever this bounces, there is a higher probability that it's going back to test that highs. And then from there, we don't know where the market is going to go. So the best place is to buy here, and your target would be the high of this. That's it. That's how I use the trend lines. I mean, I'm not buying stocks with that are dipping this much generally, but I do follow the indices, and whenever I follow the indices, the first bounce of the trend line gives me confidence that it's going to bounce right here. And if it bounces, if it fails, that's a very bad sign. But if it bounces, it means that the market is still in an uptrend, because it is still following the trend line, and you can be long market. So yeah, coming back to where we are, I mean, ES is still, it did not even test the trend line. So yes, it still looks amazing. And NASDAQ trend line still, this is the short term uptrend. I mean, even the short term is not broken yet. And I would say this is probably the medium trend. So we still have a long way to go for it to come back to here. Russell is the one that's been struggling. It's been struggling most of the year. I mean, this is horrible. I mean, nobody wants to be. If you are long Russell this year, you have gone nowhere. Not really, right? I mean, if you keep adding, especially over the year, you will probably be red for the year. Just the Russell. I thought when this broke out, I thought we are good to go, because after such a huge move, a breakout, I mean, I was expecting a huge move going into December, but that's not what happened. And also, I should also talk about the mid caps. This was the one that first broke out before the Russell. It went sideways for how long? For about 6 months and broke out. It actually is still doing much better than Russell.
Is Russell a leading indicator for the overall economy?
It's not. Well, Russell is an indicator about the US economy because most of the companies in Russell 2000 are domestic companies. So, so let's say if the dollar is doing good, the Russell will do better. All right. So when the dollar is doing good, the Russell will do better and S&P won't. Because, for example, you have take Apple. When the dollar does really good, I think around 60% of its revenue comes outside of US. So in dollar terms, the revenue goes down. And that's it about the indices. Let me know if you have any questions about that or anything about the trend right now. And we will probably know by tomorrow or probably by end of this week what's going to happen. Either we'll see a huge move lower. There is one more aspect I wanted to talk about. See, I have to go to my stock charts. Hold on, guys. Okay. Can you guys see the stock charts? Can you guys see the stockcharts.com?
Yeah, we do.
All right, thank you. So I wanted to see, I actually didn't get a chance to look at this, these yet. That's the 80 line, we don't need that. This is what we need. See, so the NASDAQ composite, which has 2,500, I've been talking about this for the last few couple of weeks. So only 25% of the stocks are above 150-day moving average. And if we look at the 200-day moving average, that's about the same, about 26%. So even though composite is how much, about 1,800 points away, 800 points is probably around 5% away from 200-day moving average. Only 26% of the stocks are above the 200-day moving average, which is generally a very bad indication. So one of two things will happen, and both are contradictory to each other. So most of these stocks, whatever 74% of the stocks, they are already in bear market. Okay, so either they will start to bounce and get the market higher, or the stocks that are holding this, holding the indices like Apple, Amazon, and all these big stocks, whatever is holding the composite index, they will fall down and everything will go down. So what happens, either one of the outcomes, we don't know. So that's why I keep saying watch Apple, Microsoft, and all those big wigs. Is there anything? Oh, let's look at the advanced returns. This is getting worse. So when you look at this one, right? I don't know how low we are going to go. This is cumulative. This is also cumulative. Anyway, I'll get back to this later. Let's go back and finish the stocks.
Maybe interestingly, Finviz also provides a similar view of what you just displayed in a more graphical format. but it only gives a daily view. What you
wh-
have showed
wh-
as a historical view.
which one?
Finviz, right? The index page of Finviz, if you see,
Finviz.
it
Okay,
shows
okay,
the same
okay,
level of information what you just shared.
okay. Huh. I never followed that closely Finviz, but I do have Finviz. But
Because
yeah, I'll check it out.
when you shared stock charts last time, right, I realized
Yeah,
I did
yeah,
not have subscription to stock charts. But
yeah,
when
yeah.
I was looking at Finviz, the same data was there, except this one is more advanced where you can see historically, whereas
Yeah,
Finviz
yeah.
will only give you the current day's view.
Yeah, got it. Let's go through Apple. Still, see, there are certain aspects I still don't like. One aspect is, look at that. How many times did Apple move, or how far did it move away from its 50-day moving average? Okay, so let's look here. Well, I mean, this is not so high, but this is 148, and what is that? This is about $20 away. And look how, I mean, this is one of the ways people look at if it is extended or not. So this one is about 35 points away. So this is one way to look at if Apple still has the momentum to go higher or not. It is still so far away from 50-day and 20-day, and throughout, at least last year, 20-day was never far away from Apple price. So there is a good possibility. This is the reversion to the mean is what people expect to do. So high probabilities for it to come back and test the 20-day and probably go down, or even test the 50-day, and then it will probably bounce back, assuming the market is gonna continue to move higher. So this way, there is a possibility for Apple to come down, and Microsoft, it's down today. Microsoft is okay, I think. Yeah, it is just at the 50-day. So Microsoft is okay. Google is testing 50-day. Amazon is not doing good since the new CEO came in with after I think these results, I think right here, it's just going sideways. And if we look at the long term or weekly chart of it, it hasn't done anything this year. It started, where did it start? Close 30 to 56. So 33, 30. It barely went anywhere for the entire year. Facebook is still looking okay. In the long term, this one still is looking okay. But I have never seen Facebook this weak before in the last few years. So maybe that privacy issues with Apple or the App Store is making a big deal for Facebook. We'll probably know what happens by next earnings for Facebook. Tesla looks amazing. I mean, it couldn't even come back and test the 900. This is something what I am seeing. I mean, anytime I buy or think of getting short Tesla with debit spread, vertical spread, it's hard to make money. That's why I'm trying, broken wing butterflies and so on, where I don't put a lot of money in. And sometimes what happens with broken wing butterflies is, even though it does not move in the direction that you want to, it will still make some money. Because most of the broken wing butterfly, for this one, the one that we bought recently, that broken wing butterfly on the put side has a positive delta. Okay, when you have a positive delta, if the stock goes higher, you will actually make money. So the same with Nvidia, every time it goes down, there are buyers coming in. So whenever the market will turn around, these are the two stocks to watch. These are probably the first mega caps to run before any other. Did I miss anything? Got Apple, Microsoft, Google, Amazon, Facebook, Tesla, Nvidia, Netflix. I don't trade a lot of Netflix because because the volatility is higher, and every time the Tesla moves, in my experience, the 1:2 or 1:3 actually works better for Netflix. And I'm not doing much of that right now. I did a little bit more last year, but that thing works better when when Netflix moves sideways like this, 1:2 and 1:3, where you don't put a lot of dividend. You'll probably put 10 cents, and that 10 cents will shoot up to $1 or so. But
You're talking about
Netflix.
the
Ratio spreads.
1:2. Is that the risk reward ratio or ratio?
No, ratio spreads. I'm sorry, ratio spreads.
Got it. Yeah.
Excuse me. So, yeah, those are the two observations that I've seen with NVIDIA and Tesla. I'm still trying to figure out easier ways to make money or without risking much. I mean, I have tried NVIDIA a few times. What I have seen is every time it goes down, buyers are coming in to buy. So this has a lot of, look at that. It came down and bounced back, came down a little and bounced back. I mean, that's been happening, most of this move. Every time it goes down, there are buyers coming in. It means there is a lot of, this is what relative strength looks like. Every time it goes down, there are buyers coming in and buying it. So these are the two stocks to watch. Whenever they turn around with, they will probably, I mean, this is probably the left side of the base. That's about to form, and we'll probably see, I don't know where it's going, but let's assume something like this. I'm assuming it will probably test the 253 level. The 61% is generally a good place for strong stocks to bounce, and it will probably make a, this is probably ideal, I guess, but this kind of cup is possible. So I would think this is probably a breakout, and we'll probably see a handle here. This is something that I'm expecting. When you have an idea of what to expect, that makes your life so much easier. Okay, if you are expecting this and things and the stock moves in a similar way, for a fact that you will get the confidence that this is the place to get in. Let's actually, I was watching UBST, and look at that. I drew expecting the move this way, and look at what happened. It broke down, went, tested, and it's coming down the other way. It's moving exactly the other way. This is not what you want to say. So these expectations kind of give you a very good idea of what you were expecting a few days ago and how it is behaving. And if it were moving this way, you could buy some small options and see. You can start a small position and see how it goes. What else we have? Well, I mean, that's all I have, guys. Let me know if you want me to look into any of the tickers. I know I have a few tickers here. I can go through them. LCID. Yeah, I mean, it's probably making this, if it is making a base, it's probably it's at the left side of the base. I mean, it has long ways to go. Rivian. Yeah, same thing. It's probably making a base, maybe in the middle of it. Again, if it breaks the low of this, which is around what, $100, yeah, it means that that's not a good fit to buy anymore. But if it breaks 100, you could probably buy some puts to the downside, and it will probably go down to 72 or so. A lot of people are short Rivian because of its high valuation right now. I think the valuation is about, actually, I don't know what kind of valuation. They don't have any sales yet, I think. They just have some contracts.
Or 78 billion, right?
Yeah, but I don't think they have any sales yet. So
They were valued
you-
higher than Ford.
Yeah, I mean, that I understand. See, I mean, they said the same thing about Tesla. Because for Ford to manufacture, again, we are talking about fundamentals that I'll give my two-minute take on it. The best thing to do is not to compare Ford with any of the EV companies, because the manufacturing process is totally different. For Ford to revamp or change everything to manufacture EVs, I think they have to put in a lot of money. And these guys already have that infrastructure. I'm sure they already have the manufacturing facility with whatever they need. And generally, it looks like it takes a while for even GM or Ford to do that. But when I watch the price action, what I've seen is there are days when all these EVs will go down, because they are all, anytime the market realizes that all the new EV companies are highly valued, they'll move some money into GM and Ford. That's what happened in the last few days. When this started moving lower, Ford started breaking out. So, but again, these relations generally do last a little longer than what we are seeing. I mean, Ford broke out and failed miserably. This is horrible breakout. If it breaks below 19, yeah, that's it, done. This would be like a topping rounded top if it breaks below 19 or 6 or 19. Let me have a look. This is all I do all day. Anytime I see a chart, this is all part of the research. Whenever it breaks, I get an alert and I decide what to do.
So, KP, this is Yatin here. So, on the LCID, is it like something to look for it for the longer time? And that's what my question was, because I saw recently they were awarded with some best car of the year or something for the the EV car. So
Yep.
is that something, because why I'm trying to relate it, like you remember, like Tesla was around $200 to $250 just 3 years ago, and then its valuation is almost now, I can't multiply also to say that how much it increased. So is
Yep.
that something that we can expect from a company like something like LCID or something like those companies? So that's why I asked you to send that webinar question, like it is something to look for like longer term, 2 years or 3 years.
I mean, I can see what I don't think even market can see what happens 2 years from now, not even 6 months from now. Okay. All they need is one bad crash and it could crash. Stock could crash. So the best thing to do is, follow the price and see. I was thinking if this could come back to 28, that is probably a good place to, if you're talking about the long term, if it comes back here and tests this level, there is plenty of support here. Okay. If it comes back here and tests 29, I would probably be a buyer. I mean, if you are buying the pullback, and
Actually,
see if it,
I was holding it. You remember when it was around 60, we had to do we did one credit spread and one the naked put spread, and then it was going back, and then I got assigned, and I was holding it from long time, almost 6 to 8 months. So finally, when it went up, and then I got recovered. So yeah, so it went to $19 like that, to that low from our $35 price. But I just waited patiently. Just I was hoping that means I had a confidence it will go up at least someday.
generally what I mean for you, okay, any of the all of them, the Lucid or Rivian or Neo or FSR or even Ford, right? None of them are leaders. They have to prove themselves, and it will happen over the next few quarters. Okay, they have to start, but once Rivian also comes out, then we will probably we will be able to compare them. I'm not.
No, but is that not like they are going to capture the the monopoly of Tesla from the market? Like if let's say Lucid or FSR or these companies like that, or let's say for that instance, Neo, if they are launching in US or something like that, would that not terribly take away the monopoly of Tesla? Like right now, Tesla is like much higher valuation than what they really do.
So far, based on the price action, I don't think Tesla will be the number one forever, because they are at least 5 years ahead of all these guys. And one of the things that might change or that will keep Tesla in the lead is their autonomous feature. Okay, I don't think any of these guys have not even plans to have an autonomous feature yet, and they are not far away from it. If that's the case, why would anybody buy these cars, right? I mean, and also then we have seen this happen recently, right? Is it Avis Budget who is buying 200,000 or 100,000 cars?
I think Hertz or something.
Hertz, yes. So after, as soon as they said they were going to buy it, Uber came out and said, we are going to have our drivers rent it from Hertz and drive it. If this is if this process really works, nobody's going to buy anything else. And if this autonomous works, Tesla would totally go into autonomous business, or they could probably sell all their cars to Uber and everything would be autonomous. So we don't know how the future is going to be. Okay. Yeah. There are multiple things right now. This is very volatile stock. That's all I can say, Yeah. And if this was it's the same case with Rivian too, right? I mean, it came down so much. It takes a while for it to recover the whole move.
Yeah, some of these IPO, like the recent launched IPO, right? It's very risky to pick it, because I really get scared after seeing C3AI, how it is like from where to where it came down.
Yeah, true. That's why stop losses. I mean, the easiest thing to do is stop losses. However, when I trade an IPO, my position is small. So what I mean by that is, let's say if I'm putting $10,000 in a stock, okay, and on a regular stock, and in an IPO, and I have a maximum stop loss of 8%. What I would do is I would only put 5,000 in this, okay, and have 16% stop loss. That way, hold on. Yeah, that way, what happens is, because they also move higher really fast, right? So that helps me not to choke my trade-off, but also I am not risking more amount than usual. That's it. I mean, if you buy any of these stocks and have 8% stop loss, maybe you'll be stopped out in a day, because they move really fast. 10, 12%, 16%, you have no choice but to get stopped out. Okay. So whenever, my point is, whenever you go for an IPO, start smaller. That's it.
Okay, I get it. So KP, I have one basic question, maybe very basic question. On this, when some stock goes to the lower, like let's say 52 weeks low or the lowest level, so then after that, what kind of buyers would do the selling? Like, because it is already low, so most of them would have already sold. So now is this not time for some new buyer to come and buy it, or like how is this price action you calculate it?
Okay. At the lows, the only people that can move these kinds of any stock, right, from the lows are the institutions. Okay. And for them to buy, generally something has to change, or there is a reason for anything to go to their 52. Let's say if they have decided, this is how institutions work. For example, let's take Rivian. Okay, it went fair 182, it came down to $100. Okay. And let's say they want to buy 2 million shares. What they are going
Okay.
to do is they will probably decide on buying at 110 or even 100.
Mhm.
So whoever does the fundamental research, that manager will go to a trader. He says, I want to buy Rivian between 100 and 120. That's it. And they're going to buy
Okay.
those two. I mean, they're not going to obviously buy in a single day. And these
Mhm.
days, what I hear is they have all these algorithms where they only buy 500 stocks at a time, which is nothing, given
Okay.
the volume for on this one. So they are the ones who, and they stick to their analysis
Mhm.
until their fundamental analysis is wrong. So they are the ones that are moving the market. And
Okay.
we actually follow their price. So once they start buying all this supply, right? I mean,
Mhm.
every time this goes up, all these guys, some buy for break even, some will sell for a little bit of loss, something like that. So once this supply is all drained out, actually for this one, I would say above 130,
Mhm.
no, 138, I won't even consider these 3 days. So about 138, this will probably move much faster higher. So it has about $20.
Okay.
After $20, it's on how many days are there? 1, 2, 3. So just 3 days of volume. So above
Mhm.
130, or even let's say 140. Okay, above 140, from 140 to 180, the move will be much faster
Faster.
because there's
Okay.
not a lot of supply. There's not a lot of sellers.
Okay.
So
Yeah. Yeah. Why I was talking is because I remember we had a good position of snow one time, and then around 6 months back, and then it broke the low level, and then it came down to around 190. But again, it turned around to be like now 350 around. So not more than 6 months, I think. So that's the thing which happened. So and then some stocks like space, it comes back around 14, $15, and then again it goes around 30, $35. Means recently I have seen a couple of times happening that. So I was a little bit, thinking like, how is this thing work? Like sometime turns around like from the lowest to it goes to the high side.
well, we cannot formulate a thesis based on uh, a stock movement and use that theory anywhere else. Okay, every stock moves in a different way because I mean every business is different, right? So
Yeah. Yeah.
it's the consensus of the market about the stock that actually moves the stock.
Mm-hmm.
So for us, being technical traders, the simplest thing to do is whenever the supply dries up, get in, see if it
Okay.
works out. If it doesn't work out, get out. That's it.
Okay. Okay. I get it. So how is space looks to you? It's already low. I know what you would say, but I just wanted to find out one more time.
See, the thing is, we are still. Well, I mean, here comes the trend of the market. If the market
Mm-hmm.
goes down after tomorrow, all of these stocks are going to get slaughtered. Believe me, this is nothing, right? I mean, it did not even break the IPO slow. So as I said, even though this looks like a lot, but this could go all the way down to $52 if there is a correction.
Okay. Uh-huh. Yeah. Yeah.
So we don't know. We'll see what happens. That's why, always take one day at a time, have stop losses, and that's it. The best thing to do is, get out on the, again, there will be plenty. Again, I have been through the situations where, I mean, forget about everything else. Look at Doc yesterday. Okay, I had puts, I had this level 55, 60. As soon as it broke out, I thought, this is done. This is probably going higher. JP Morgan downgraded it. It opened here at 51. It could have been an amazing trade, but these things happen. These things happens plenty of times. There's nothing we can do. However, if I don't sell this, and if this opens up like 3-4% higher, I'll probably lose 50% of my value, options value. So the best trades are the ones that will work right away. Okay, so
Yeah.
that's how I see it. And also, one of the things that I had to overcome over the years is the number of trades. Having a lot of trades, even 2 years ago, I used to have a lot of trades, and that was always a problem. Now, the faster I get out of a trade, the better for me. And there are trades out there all the time. And if you are doing both, on the short side and on the call side, there are, I would say, at least 10, 20 trades I can find every day.
Yeah. So KP, one thing like I know we have requested and you said you will be doing it. Do let us know your trade size at least so that we know like which has you are feeling more comfortable on what, because for now I have all the trades of same size because I don't know which one will work.
I am thinking of something like this in the lines of this. So uh, most probably I will have, when I say 6 units of a trade, that will be the full position. And when I say 2 units, I'll probably say, whatever amount let's say if I'm buying half the position, I'll probably say I'm buying 3 contracts or something like that. And I will probably do in my own portfolio, multiples of 3. And
yeah, exactly. Like maybe something like this would work, like maybe 10, 25, 25, 50, and 100 or something, whatever you feel comfortable.
yeah, that's what I'm thinking right now.
Yeah. I think that would be really, really helpful because some of the places we really did very, very good on getting the profit, and some of the places it doesn't work out. I mean, you already tell us, right? This is just a small position, so we know that those places. But if we know overall, then I think we can really do more better.
But I also want to let you guys know that some of the trades where I say I have full position, they may not work great. And sometimes
I know.
but
I do that because I
believe
have
me,
seen it.
that's
Sometimes you say 25%. I'm just tiny position or lotto, and that just in a moment, 30 minutes, you just get out saying that no, I just done. Means either it is profit or it is loss. Get out.
Yeah, I mean that happens because I have no idea where it's going to go, right? But my position is generally based on my trading history with that stock. Okay, and one of the reasons I also post saying that I haven't traded this before, it means that I have no idea where it's going to go. Those are the ones should be really, really small, because sometimes they work really great. And sometimes, like I think we bought something yesterday for 30 cents. And I went out, by the time I came back, it squatted and it went down really fast. What was that?
Yeah.
I think I have it here.
I think Bull is the place where we really means you are really, really very good at that.
Yeah. I am working on it, but I think I'm gonna do it, during the New Year holidays, probably before the New Year. That's what I'm thinking. Yeah, this one. Look at that. I mean, this is an amazing base, right? I mean, it went here, it came down, and it tried to break here. It did not. So this is the first time since, what is that? February. This is the first time it broke out. Look at what happened. Broke out and came back really fast. That's crazy. That's absolutely crazy, but that's how the market is right now. Okay. It's not because these are not failing because they don't have momentum or anything else. It's because that's how the market is. Anytime the stock goes up. So this also tells us that anytime a lot of retailers are, anytime breakout happens, a lot of retailers get in, and the institutions are selling. That's how we are losing all these breakouts, and we have seen plenty of them recently.
KP, this is Venkat. Just joined today.
Yep.
So on that question on that institutional buyers versus retail buyers,
Yep.
Is there a way to know this real time? If not real time, at least end of the day that these many trades were from the retailers versus investors or the institutional investors?
Well, I mean, I do not trade based on that, but this is something I have been watching in the stocks in the last 6 months, and that is the reason, that is the reason I understand that this is happening. I mean, it's not one stock, it's like probably 50, 60, 70 stocks happen. This is one of the trades. But I mean, everything gives us good information. Yeah, anyway, to answer your question, no, I do not have any of that information. But if you want,
is there a way to find that out? Like, okay, this, like, let's say every day we monitor a stock like from the watch list, and you see that there are institutional investors buying that, they're going back to your point, they might be buying from 100 to 110, 500 each few times that day.
I don't think so. I don't think so. But the only research I know is, I think I have, let me show you that. I do have a subscription for this. If you guys need anything, let me know. It's called HedgeMind. So, but again, these guys have the information. Let's see. Not this one. Let's look at this chart. Okay. I can't remember the. Can you guys see the browser?
Yes.
Yeah. So this actually shows you who is buying what. So for example, what was the one we were talking about? So I mean, they show who sold this recently and who bought this recently, who increased and who were the new buyers, who sold up. But this does not come out until they file with SEC. So
right. It's like very delayed one, right? I think
it depends. It depends. If it is more than, if they have a stake that's more than 10% in the company already, I think they have to do it right away in a day or two, or probably, I don't know. I mean, it's not 3 months. Generally, the rest of them is 3 months. I'm sorry?
I'm not taking your video because you're not even doing anything.
Oh. All right. All right.
Hey, KP.
Yeah.
On this same one, right? So these are the dark pool trades, right? And the dark pool trades, whatever it displays here, these are not real time, right? Like as you said, like there will be some delay.
No. Dark pool is real time. So for dark pool,
HedgeMind is not dark pool trades.
No, they are not. They are not. They are just collecting whatever has been, filed with SEC.
Oh, okay.
So you go here, you see, filing date and how much portfolio they have. Look at that. When they say quarter low, quarter high, quarter average, so they are assuming that they bought for an average of 147, but that's for the entire quarter. They could have bought it for 137, all of it, or 156, all of it. Who knows? So no, dark pool trades are not this one.
Do you have access to dark pool trades?
Let me show you. Oh man. Can't remember these passwords, man.
So when you take trades, right, do you look at this flow algo for dark pool trades?
So the good thing about flow, not the dark pool, but I watch the options. Generally, these are hold on. These are the equity blocks. So these are dark pool. So it says 26 million of Apple, 8 million, 3 million, right? These are dark pool. But what happens is sometimes this is also this is their proprietary way of telling you that there is a big buyer of Tesla at 101, 1064 or whatever. But what happens is this one coincides with the the option trade too, generally. And I watch option trades all the time. And I generally post options when they have, really big, at least 1 million in the trade. If the trade is, the trade size is at least 1 million, sometimes 700,000, 500, depending on the stock. If it's Apple, yeah, it has to be over 2 or 3 million. Yeah.
Yeah. So one question. So did you had this access like before the pandemic, like, from February, January last year? The reason I'm asking, right? So usually people say that like before any crash, right? Any bad event happens, the dark pool gives us the data, right? Let it be this COVID or like maybe the Las Vegas shooting or any of the bad events, right? So the dark pool gives the data because institution dumps a lot of, right?
Well, if the institution is dumping, you can see that in the price. You don't need a dark pool data for that. But again, one institution is not.
Delayed, right? KP, like it's not instantaneous, right? It's like
This is instantaneous.
Yeah. This one is instantaneous, but the price in the chart, that's only after they file in SEC.
No. I mean, I'm talking about the price action. I'm talking about this price action.
Oh yeah, this price action. Oh yeah. That's what I'm saying. Yeah. So that we will know only if you look at the dark pool trades, right? Not the charts.
No. The price action you will see right away, right? This price action. I'm sorry.
But let's say if the institution is like selling something, right, over a period of time, 1 month, but we will not see the price action immediately, right? We will see like only after they file with SEC, correct?
No, when I say price action, I'm only talking about the candles. I'm not talking about the, the hedge mind site at all.
Yeah. Okay.
Yeah. But I know what you're saying.
Yeah.
Believe me, we don't need to know what one institution is doing. What we need is a consensus of the whole market. Okay. If multiple companies the multiple institutions are selling it, you will see that right away. Okay. I mean, this is one of the classic things. Look, it came down. It came down and did not bounce. It means there is a huge selling pressure. That's it.
But yeah, again, the question on this, when you say like multiple institutions selling, right, we will see the price action immediately, right?
Yeah.
But they don't file with SEC immediately, right? They do file only after the.
They don't.
Yeah. So what you're saying is even any dark pool trading has effect on the price action in the technical chart.
Of course it will be. So anytime you have a dark pool, there is a high probability you will see a higher volume on that day. Wouldn't you think?
Okay.
So I mean, okay, whatever you again, we don't need to. I mean, for me, right? I do follow those things for trade ideas. Those options, those dark pool trades, those give me good idea. Let's assume I saw a dark pool trade today on UPST. So let's say it's moving higher, and I saw a dark pool trade today, and another couple of days I'll see it again. You see those things again and again, in 2 weeks, you know that something is happening, and you will also see the price moving higher. And if you are just following the dark pool, that way you can probably get in. But if you are only following the price action, you don't even need the dark pool at all. That's what I'm saying. All you need is this price and this volume. That's all you need.
Is volume? Can we use volume as the institutional like qualifier?
It is. It definitely is. For that, I keep posting this too all the time. So for example, I watch this all day. Apple is not a good example, I guess. Let's look at something. All right. This went down today. It broke price. So yeah, look at the volume. The volume is 83% of the usual volume. And this is of interest to me because it bounced a little and it broke this low. Okay, so this is of interest to me. And when you see it break down with higher volume, that is institution. And also, actually, I mean, volume gives you so much information. So on this bounce, you see how big the blue candles are. Oh, sorry. See how big the blue candles are. They are small while it's moving higher. Okay. And while selling it out, the candles started, or the volume started moving or becoming bigger and bigger. It means this is institutional selling.
PP, do you still follow the unusual option activity from the Najarian brothers?
What option activity? I'm sorry.
The unusual option activities, right? The Najarian.
Well, I mean, it has to coincide. It has to definitely coincide with the technicals. If it does not coincide.
Do you follow that?
Yeah, I do. I do post it, right? I mean, I do post. Yeah, I do. I mean, again, I don't post all of them, but when it makes technical sense for me, that now if something is about to break out or something is breaking out. But what I have seen most of, even today, right? I saw, which one did we trade today? Hold on. Give me a second. Run. So let's go back to. We bought run puts, and as soon as we did that, are you seeing the flow algo?
Yeah.
So around the same time, I started seeing these blocks. So let's go back to the chart. So it's a 36, 22, 35, 88, 34, 96, right? So let's look at the chart. I can't remember the price, but yep. I mean, this is the breakdown of what we were watching 37.42, and look at where the option volume started coming in. So 36, 35, 34. So oh, actually, they actually bought it after when it was going higher. Let me check. But anyway, the point is, the best thing about Flow Algo is it actually has the voice. It has the voice commands, so I don't even have to watch it. It says, you know, you have run puts of so and so 2,500 run puts bought for, you know, $1.80 or something like that. It keeps you know, talking about it all day. Anyway, so my point is, you know, most of the time I'm already in the trade before I see these. But again, I'm not in all the trades, so I miss a few. All right, let's get back to any more questions on that?
Okay, this was my first trade looking at, and I almost missed it because once I saw it, like from 275 to 330, it was already done. I was just trying to understand. Again, maybe you explained it. Like, how did you pick that strike price of 35?
Oh, strike price is not much important. I mean, that's based on how many options I want to buy and how far it could go. I mean, strike price. Okay, you don't always have to follow exactly what I'm doing. Let's say if I am buying 35, and if you are buying 40 puts, your trade is much safer than mine. So that's it. So in the money, better trade. But obviously, you know, when you are risking less, you will probably make less too. And let's say you go ahead.
So, but didn't that trade work? Because once you have that trade for 35 and it went lower right away, and then you sold it off at 330. But if I had brought it at a different strike, wouldn't that be like I'll be still holding on to it, right?
No, I mean, you would still make money on it. You would still make money on. So, okay, actually, this is a good question. I generally never talk about this, but I should. This never comes out to talk, but see, where is my chart? Okay, let's see. What are the studies I have? I have a different monitor for all my small charts. I think it's a different. Hold on. I don't have it here. Is this the one? Yeah, this is the chart I have most of the time. So it's 5 minutes. Okay. So whenever I see the first of all, when it broke 37, I was waiting because what did market do all day? It tested this 40. You know, that was the previous support. It tested that and started moving lower. So from here to here, right? How much was that? 40 to 35. That's almost 8% or 9%. So I wasn't sure after 9% of the move if it would go lower or not. And I also posted this saying that it is still testing this range. And once I saw it, you know, moving lower, I decided to get in. So anytime I buy something and I see a red candles, a lot of them, I want to get out, at least a little bit of them, so that gives me a cushion. If it bounces back above 37.42, I can get out without any loss. So this VWAP, this line, and the 20-day, these are the two lines I always have in the monitors, in the other monitors where I watch for intraday moves. Whenever the price goes far away, and then by this time I think it was down 15 or 16% or more. I think it's already 15%. So that's probably 17 or 18%. So when you see a stock go down 17%, you don't want to be short here, because you know for a fact that it's already, you know, a lot of people have already made money today, the day traders, and they would want to cover. As soon as, one way to look at it is to draw a trend line. I know this is a steep one, but as soon as this breaks above, people will start covering. A lot of people are, all the day traders, they're all watching this trend line. Okay. And as soon as this breaks, they want to cover because they have made enough money. And a lot of people, these are some of the day trading techniques. They'll probably start right there, shorting right there, the low of first 5 minutes. Okay. Some even do low of 1 minute because they know that it tested this level and failed. They'll go short here, and their stop would be 40.75 or 40.85. So they are probably, you know, risking $1, which is about what, 2.5%, which is totally good for a stock like Run because it moves a lot. And they never have to worry about it, and they don't have to sell until your trend line is broken. And I mean, the trend is changed, and it did not change until it broke above the trend line. So, okay, my point is, whenever you see so many red candles, I want to get out a little bit of my position with very small profit. Doesn't matter. Sometimes I even get out for 5%, 8%, 10%. That will still be a cushion for me if I am wrong, and I don't want to be wrong with my whole position. That's the only reason I sold it. Let's say if when it broke this 37.42, it was down only 2%, I wouldn't have been worried so much. Because it was down 15, 16 or 17%, I'm worried that this could bounce back, half of it. If it bounces half of this position, I would probably lose a lot of money, right? So this is all risk management. I mean, there are a bunch of things I do to manage my risk. Believe me, once you learn risk management, you can survive in any market. That's all you need to learn. But you need to have these strategies or these rules in place where you can reduce your risk. Was that?
Yeah,
Did
great.
that make any sense?
Yeah. Thanks, KP. And quickly on that chart itself, I know we were chatting. It'll be nice to see that nice charts that you have in our own account also. Is there a way that we could export or at least give us those, like example, those trend lines, the support lines that you got? I don't know. I'm not too familiar with all those studies in that application.
Oh, you don't use Thinkorswim yet?
No, I do, but I have very few. I didn't really play around with all the the studies that you have added on, like all that supports that you had, like 37, 35. You had those lines nicely done.
I draw this on a regular basis. So the best thing to do is you just have to replicate it. I mean, well, again, I know you joined recently, so it's gonna take some time. You will see where I'm drawing my support lines, and you will get to it. You
Okay.
Don't worry about it. You'll get there. All right. Whoa. It's been a while since I've changed this. I can't even remember which one I'm using. This one. All right, this looks good. Yeah. All right. Let me go through a few questions I have. I sold NVIDIA 275 put. 275 put. 275 put. If you are profitable, I will probably get out. I mean, we don't know what's going to happen in 2 days or by tomorrow. We don't know. There is a lot of risk right now. One of the reasons I don't have any positions, I think I have like less than 2% in the market right now. That's only because I have no clue what's going to happen. This is probably one of the biggest decisions Fed has to make since 2018 at the least. So right now, I would not sell any puts at all. Or if you don't want to sell it, you could probably buy the 265 put and cap that for $10 a max. Okay. Anyway, selling puts in this environment is definitely, I would not do that. It's always better to cap your downside. So, make it a spread instead of naked puts. Okay, SI. Yeah, again,
KP, can you hear me? This is Srilekha.
Yeah, go ahead.
Basically, I'm just trying to follow what you said from last week. I'm trying to follow this chart.
Okay.
If you remember, you said that, it may go all the way up to 180 if it breaks. I don't remember which number today, but
well, I mean, it's not. It's done.
Right.
That thesis is done now. So
Right.
I thought if it breaks 176, I thought it would go to 186 because there is no resistance here.
Right. So, and then when it started running a little bit crazily that day, I was like, okay, is it in that price action that you were saying? Is the price moving up? As a beginner, we don't know. So we are like, oh, what's the next?
One of the easiest ways to think about anything. I mean, all my trades depend on these lines. That's it. Okay. Below the line, bearish. Above the line, bullish. That's it. And every line has significance. Well, I mean, not everything has the same significance. For example, 196 has more significance than 176 when the stock is going higher, because that's it. A lot of people are trapped here. Okay. As soon as it hits 196, all those guys are want to get out because they are trapped. So for me, let's say if I am buying it right here, okay, let's say 173. Actually, I did buy on this breakout, okay, and I think that we lost like $20 on it. I think I bought the stock. I lost $20 on it. I got out. I think we sold for 206 or whatever. But if I wouldn't have sold it there, this would have been horrible.
Mhm.
I would have lost what? 220, $80. Instead of losing $20, I would have lost for $80. So
Right.
as long as you know where the stops are or where you get out, I think that's all you need to know to get into a trade and get out of the trade. And talking about this never played out well because it had to move above 176 for me to even get into this trade. And especially Silvergate, this depends on Bitcoin. And Bitcoin has been horrible in the last few days.
Okay.
Okay, beyond. Yeah, beyond. One of the simplest things to see if a stock is worth going long or not are these three lines. That's 200, this is 50, this is 20. Which way are they pointing? Down, down, and down. This is probably the short-term one. This is intermediate, this is long-term. Right now, all of them are pointing down. If you see, I mean, if you even want to buy the dip, I would want for this to, turn around and start moving higher. Easiest way is watch this line. I mean, I know there are investors who just trade based on 50-day. They buy when it breaks above 50-day. They sell when it breaks below 50-day. That's it. That's all they do. And they will do better. And they are patient. They do their fundamental analysis, and this is all they do. And it will work well for them because they are cutting the losses as soon as it's breaking down their 50-day moving average. So yeah, this is in a downturn. I guess UTST is also the same. As I was just talking, I thought this breakout would hold, which it did not. I mean, it did bounce a little, okay, but in one day it took it off. It took it down again. This is something to watch too. So it broke down, came back, tested, came down. Again, this is we have a gap here. So this has some importance. So we got some buyers as soon as it hit the gap high, went higher. This is what I'm talking about, the price action. This is what you need to follow. It went higher, again, it started moving lower. Again, this is also because of what's happening with the market. Everybody is selling these high value stocks. Now,
good entry?
I'm sorry?
What's a good entry for this?
Oh, I wouldn't buy this anytime soon. See, what happens is when a stock goes down, this is what, 60% more, 70%. This could take years, or it may never come back.
Mm-hmm.
I mean, if you look at some of the stocks like Cisco, Intel, it took 20 years for them to come back from their dot-com bubbles, bubble burst. So this is not something I would buy at all. I mean, there are plenty of stocks that are doing better. I'll probably look for the stocks that are showing relative strength.
Sure.
Okay, now QQQ. I talked about this. So, well, I mean, I talk a lot about this, which is same as QQQ. It is still, even short term, it's in an uptrend. We will know what happens by tomorrow, hopefully. I mean, if we don't know by tomorrow, I am tired this year. I mean, the market hasn't been good for swing traders this year.
Right.
So
confusing for us beginners.
it is. I mean, it's been really hard. I mean, it's been really hard who has been in the markets in the last few years, especially the ones who have traded last year, expecting, you know, something similar, or this year hasn't been easier. Definitely not.
Right. Okay. Thank you.
Sure. Any other questions, guys? No, that's all I see.
Hey, KP.
Yep.
Yeah, so initially when you were talking about that Russell has relation with the USD, right?
Yep.
Yeah, so and growth has
I
growth-
won't worry about it too much. I mean, see, that's what the fundamental analysts do, right? I mean, for us making the trades, I really don't care. I mean, the thing is, what happens is when I see Russell doing better and the stocks like Apple and, you know, all the multinational companies doing lower, I do want to understand what's happening in the market. That's when, you know, I see the dollar. But generally, take the trades, I don't think I generally consider that too much. But anyway, I'm sorry to interrupt you. Go ahead, ask your
No,
question.
I mean, yeah, on the same line, like, so, like growth is also impacted now, right? So, and growth is also related to USD.
No, actually, I think it's more about treasury. But again, right now, even treasury is doing it. It's not doing great, right? I mean, when this started moving higher, that's when all the growth stocks got hit. Okay, when it went down, growth stocks came back again. When the yield, right? I mean, this is actually yield, 10-year treasury yield, which is 1.438 right now. So when the yield goes higher, the borrowing cost for all these growth companies goes higher. When you are borrowing at a higher rate, you'll obviously will not have the same amount of profits that you would show for your growth, you know, by borrowing at a higher cost. So that's the simple explanation. That's one of the reasons I watch this. But again, this correlation, not all correlations are work all the time. Right now, this is down, but look at the growth stocks, they are down too. So as long as there is a correlation, I watch them. But there will be plenty of times there is a disconnect.
Yeah, so I think many times you said like, yeah, treasury is related to growth, but the question is like, is there any relation or correlation between the Russell and the growth stocks?
Well, Russell has a lot of growth stocks because they are less than 2 billion. Most of them are less than 2 billion, right? They are just coming up. I mean, they are really, really, really small companies.
So
if you are looking for stocks that you want to keep long term and in your scanning of the stocks, the best ones are the ones that are around, you know, $5 to $7 billion, because those are the prime companies that will go from mid cap to large cap in a matter of 2 years or 2.5, 3 years. Generally, those stocks go up like 600-700% in 18 months.
So you're talking about Russell 1000, right? When you say
MDY, that's the mid cap. So this is a lot of hedge funds do this. This is what they do. This is what they are looking for. Okay, because they keep it for 3 to 5 years, and a mid cap company will go into large cap in 2 years, 3 years. I would say, you know, Sharp is one of them that has. Look at that growth. Even from here, look at that growth. The 118 to 4. That's 3 times or 4 times from here to here. Of course, Sharp actually outperformed everything else. I mean, they changed the landscape of e-commerce. So, but generally, This is what they're looking for. And if you have like 20% of your portfolio in this company, you have probably more than double your portfolio. Actually, yeah, you have double your portfolio because of just one stock. So,
So yeah, sorry.
Right.
So MDY as the mid cap, but like Russell 1000 as well as mid cap, right?
I never follow the 1000. I just follow Russell 2000. So,
Okay. So
no
if
clue.
Russell 2000, yeah, we all know that it's struggling. So what are your thoughts on that? Like,
Well, I mean, we have a big range, just like Amazon. If it breaks below this, we are in deep trouble. That's it. Believe me, everybody is watching this. If this breaks down, we will see a lot of selling.
2110.
Oh, here? No, that's not what I'm talking about. Yeah, if it breaks this level, yes.
Yeah.
So for IWM, it's 207, I think. So 207, 209, or probably 207. Yep. Let's say this though, 207. If it breaks 207, yeah, this is in big trouble. That's probably a sign. If this breaks 207 and starts moving lower, that's probably a sign of recession, probably. I don't want to scare you, believe me.
Yeah, sorry.
Unless this is something I have learned, and this lesson did cost me a lot.
Yeah.
Unless something is broken, it's not broken. Okay.
Yeah.
Never assume that something is gonna break. That never happens. If it breaks 207, yeah, I would think we will be in a big trouble. I mean, when it broke above that 234, I thought the downtrend is done and we start moving higher. And I was expecting a move like this.
Yeah, that's what I thought. Like after the big consolidation, yeah.
Yeah, that's what happens with any big consolidation. I mean, we have seen that with Tesla, right?
Yeah.
The three-year consolidation, and look at the move. And it's not just for Tesla or any stock. You take any stock, the longer the consolidation, the higher it's going to go.
Yeah. And so like when you said you're not scaring, right? So already I think we have been hearing news about the Evergrande day, right? So what do you think about that? Like, so, or
I don't think any. Okay, the only thing I care about is this right here, the price action. Unless the market tells me that we are in deep trouble, we are not in deep trouble. Whatever happened over the last 8 months, we are still in the same range. That's what I'm going to follow. Again, when I first started this, the webinar today, this, my take on the market is either all the stocks that went down 50, 70% are going to bounce, and the market or the indices are going to stay right here, or starts moving higher, or the stocks that kept indices higher, all those big cap stocks, mega cap stocks, Apple, Microsoft, Google, Tesla, if they starts moving lower, yeah, we are in deep trouble. That's it. Keep it simple, and wait for to see what's going to happen. Until then, don't make any decisions based on that until that happens. I mean, this is probably the easiest way to think about the market right now.
yeah, thank you.
All right, guys. If you guys don't have any questions, I'm going to wrap it up. All right.